US PPI inflation has come in hotter than expected and the stock markets have tanked. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. We've just had the latest update on US PPI, that's the Producer Prices Index. This looks at inflation from the wholesale side. Now, the numbers came in hotter than expected. If we look at the core number, this came in at plus 0.5% month on month. It was expected to come in at plus 0.3% and it was plus 0.3% the month before. If we look at the headlines PPI, which includes volatile elements like food and energy, this came in at plus 0.7% month on month, well above the plus 0.4% expected. And the previous month, it was actually down 0.2%, again, month on month. Well, the market got a bit spooked by this. Bear in mind that on Tuesday we had the latest CPI update and that came in a tad above expectations, although it was still down from the previous month's reading, at least the headline year-on-year figure was. We also yesterday had the latest update on retail sales and these were much stronger than expected too. Put this all together and you've got the markets getting scared and thinking actually the Federal Reserve were on the right track when they were saying that interest rates are going to go up further than the market at that time expected. If we look at the CME FedWatch tool, this looks at the Fed funds futures. This is where real money goes. We can see the following. We can expect 25 basis points rise in March, another 25 basis points rate hike in May, but also the probabilities are rising of a third 25 basis points in June. This would take the Fed funds rate, if all those three came through, that would take the Fed funds rate up to 5.5%, well above the 5.1% that investors were suggesting would be the case earlier in the year. And so, as I say, the Federal Reserve seems to be getting borne out because they did say that the market was underestimating how much rate rises was still in the tank. The market then thinks that the Fed's going to go and hold, and they still think that if it does get up to 5.5%, we could see a 25 basis point rate cut by the end of the year. In other news, we've also had Loretta Mester speaking today. She's an FOMC member, very influential. She reckons that the US economy is resilient and she doesn't think they're going to have a recession. She also said that the Federal Reserve was not going to change its 2% inflation target. Thank you very much for watching. I do hope you found this interesting. If you have, please like and follow. And as always, best of luck with your trading. Goodbye.